Good afternoon, everyone. Welcome, welcome. Hopefully everyone had a good morning session in the markets. The markets are definitely moving around pretty well. Certainly can't complain with getting some movement. You know, I think it's one of the biggest things we've been struggling with the past couple days, where the U.S. session will be completely dead, and then going into lunchtime, things are moving. Well, this time around, we have FOMC news to hold things back, so everyone needed to take care of their trades before then. So the morning session moved pretty well. Before we jump in, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you'll be able to register for our email newsletter list. You'll be notified every time one of these videos comes out. Along with that, in the email, we talk about a bunch of stuff that we just don't have time to talk about during the live room, and that's going to be everything from stocks, options, crypto. If it's moving, you name it, it'll be in that email. So make sure to sign up for that if you haven't done so already. Along with that, go over to the live trading subscription and trial info, where you can sign up for a free 3-day trial in the live trading. We can hang out with us for a couple days, see how we trade the market, see how we approach things, ask a couple questions, get your feet a little bit wet, and see what we're all about. Great way to check us out and see how everything goes. So make sure to sign up for that if you haven't done so already. Now, looking at the news for today, or well, for tomorrow, we do have a Japanese holiday today. That's the Constitution Day. At 4:30 tomorrow morning out of the UK, we have the Services PMI for April, forecasted at 53.5. At 5 o'clock out of the Eurozone, CPI for April, forecasted at 1.3%. And then we have the ISM non-manufacturing PMI at 10 o'clock, which is going to be the only real big mover that we have for the U.S. session, and that's for April, forecasted at 58.1. Now, of course, today, we can't forget about the fact that here in about an hour, a little under an hour, we have the FOMC statements and interest rate decisions. They're forecasted to be at 1.75%. Should be pretty interesting. You know, back 5, 6, 7 years, the markets, when FOMC would hit, would go absolutely bonkers. Nowadays, FOMC doesn't really seem to do a whole lot, so it's always kind of a shot in the dark. You know, either the markets go absolutely crazy or nothing really happens. There's a little bump, and then everything goes to sleep. I don't know. We'll have to wait and see. I obviously like it when the markets move, so I would prefer the FOMC to be a little bit more volatile, but, you know, it's we'll just have to wait and see what happens. Of course, that does come out again in a little under an hour, so you got to be a little bit cautious for that. Taking a look at the market so far, everything has stalled out and kind of calmed down quite a bit ahead of the FOMC news. Generally, when you have FOMC news, it's not that big of a surprise to see everything quiet way down as everyone's kind of waiting for the news to come out. Nobody really wants to put on any new positions. Nobody wants to do anything with any capital, and the markets just kind of tend to stall out a little bit. The euro did break down through support at 20.260 and rounded it down into our next major level at 19.940. Not to mention, of course, the fact that 1.2, that huge round number, is right there at 1.2, and that's right where the price is stuck at the moment. So not only do we have 4-hour support from a long time ago, and I don't remember how far away this level goes. This level of support was back on the 20th of December last year. So there's a good amount of time that has passed, and well, it doesn't seem to have made any differences. We still have a lot of bouncing around that area, and of course 1.2 is going to be a big area of rattling around for quite a while. Level of support at 20.260 is gone, so we can get rid of that. Good amount of continuation to the downside, and this is really what we were talking about last night in the Outlook. Any type of pop that we get against this bear trend is going to get sold, and that is your pop right there. They popped up, tested a bunch of levels of resistance, trapped above the previous bear candle's high, trapping above some of these little minor swings if you zoom into a faster time frame, and it was slammed right back down again. Beautiful bear momentum down to that big round number at 1.2, and now we're in a situation where a lot of sellers are probably taking profit, causing some bouncing. A lot of sellers don't necessarily want to initiate new positions at the lows. Sell low, hope it goes lower. It sounds like we're taking some notes from CNBC. The overall bear trend that we have going on right now really, I think, is sell any pop. Not sell at the low, hope it goes further, but selling any pops. Now, with FOMC around the corner, honestly, one thing that I would really like to see is a washout move to the upside, meaning a huge bull bar on FOMC to short back into to try to push the market back down. I don't necessarily think the sellers are done, but whenever you have a large news announcement or a fundamental shift because of a news announcement, that can definitely kind of short-term swing things around, and that would give sellers a lot of opportunity to re-short some more if we can push up towards 21,280 to try to drive the market back down to attempt the lows. All of that could happen in 5 seconds after after the FOMC. All of that could happen in 7 months when the FOMC doesn't do anything. You never can be too sure. But for right now, the bear's still in control, but we are finding a little bit of support down here ahead of the news. Nothing else new to add there, though. Over on gold, which will likely be a very whippy one today in about, well, 50 minutes or so for the FOMC. We have that bear move to the downside, a beautiful bear channel lower, and we have the initial breakdown. Looking for the secondary breakdown underneath these lows. Now, the lows that I'm looking for, 1302.3, is the beginning of the level of support. FOMC could shove that a lot lower, but that is the zone that I'm looking for, anywhere below here as an area of support. Now, we do also have the round number at 1300. We have the 4-hour support at 1300.9, and of course the larger support at 2.3. Lots of things coming in all in the same place, and I would love to see a snap below this to potentially buy into for a potential longer term hold. Again, trading gold into the FOMC, not very high on the recommended list. Generally speaking, gold and the bonds and some of the other ones that have a little bit more of a linking to those types of news announcements can go absolutely bonkers. So you do have to be very careful on gold, as well as the euro, for that matter, you know, going into that type of news announcement. But anything below 2.3, if something does look halfway decent and it's not too crazy, might be able to find some buying opportunities down there. Otherwise, though, the sellers are still in control and looking for the sellers to continue this drive down until we get to that point. Pretty straightforward there. Over on crude oil just really rattling around. Kind of a gross mover today. The API support and resistance are those thick purple lines, and you'll notice they were only 14 cents apart. The API didn't do much. It really didn't. It could have been so much better, but it just kind of fell flat on its face. We have major support still holding underneath us at 67.05. That has not been broken. The sellers have tried multiple times now to break the lows. This time around, they have failed a new low, and we're running into a situation where now sellers can try to get things going, but they're having a little bit of a tough time getting that breakdown, and every time they try, it's swatted right back up again. Now, some of these inventory levels, we can get rid of those to kind of clean up the chart a little bit. Major support still sitting at 67.30. They have closed underneath it once and now twice on the most recent bear bar here, but we are still not seeing closes below the wedge, either of the wedges, rising or descending. And we also have a low that needs to be broken now with, you know, 67.05 and through 67 with some good bearishness, and we're just not seeing that from crude yet. So right now, it's just kind of a waiting game. It seems like at the moment, we're looking to buy low, sell high, stay the heck out of the middle. And although I do have a short-term, or I guess medium-term short bias, try to say that 3 times fast or 5 times fast, but, you know, all things considered, the sellers just aren't showing up to the party. So I have to look to sell at a better price, and that would mean a correction up. Nothing else really new to add. Inventories didn't really do a whole lot at all today. We had the strong bear move down in the overnight session and going into today. That's it. So the fact that, you know, everything is just so range-bound and sideways right now, even after a huge build, I mean, inventories were way off. They were forecasting a build of 700-some thousand, came out at a build of almost 7 million. Just totally wrong. It still didn't get enough bear pressure to break through those lows. Nice bear snap, but not enough to break through those lows. Intraday, when we were looking at the movement in general and a lot of order flow movement at the $67 level, there seemed to be a huge amount of interest at 67, where buyers were stacking up heavy, big buyers bouncing it back. Every time it hit 67, they popped it back up again. Really aggressively too. I mean, they were fast moves off of that 67. When it finally snapped underneath, it popped back up and never looked back. So 67 is a big level, and there does seem to be a lot of orders that are changing hands there that could be kind of propping the market up a little bit. And once we can get out of that, if we can get those out of the way and break down through 67, get that huge buyer or that culmination of you know, a bunch of big buyers out of the way, it should be clear sailing down to 66.23. But they're still in the way, so we're going to have to treat it as a range. Over on the S&P, beautiful reactionary movement off of the next level of support. What happened to my indicators? Well, it says they're there, but nothing's showing up on the screen. Okay. What about the Dow? That one's still there. All right, let me remake the S&P really quick here. Let's go to a 240-minute chart, bunch of days of data, and 4-hour anchor charts. Okay. Well, that didn't work either. Maybe I just need to give NinjaTrader a good restart. Either way, technical issues aside, you know, overall, we're seeing a big bounce off of that rising wedge support. That rising wedge support has pushed the market back up, and we're still bouncing around this major level. It's just not letting it go, and that's going to be at 57 3/4, where the market hits it, bounces right back, hits it, bounces right back. It's just been playing off of this level back and forth for a very long time, and this is certainly not a new level. We've had resistance there, beautiful resistance and a retest, resistance, support, breakdown, break up, support, breakdown, resistance. So this is obviously a big level. And it's something that the market does seem to want to respect one way or another. So given the overall movement that we have right now, we're relatively range bound. We're not breaking down, we're not breaking up, we're not really doing much of anything at the moment on the S&P. And it could just be because a lot of traders are on the sidelines waiting for FOMC. Hopefully the FOMC will break us out of this little bit of a funk, because we are running out of room. You know, we have the overall wedge top and wedge bottom. Well, one's a wedge top, the other's a channel bottom, but either way, it creates a wedge, and we're getting towards the end of that. A lot of times, wedges break out about 67 to 75% of the way into the wedge. Very infrequently do they make it the whole way there, and if they do, it's usually pretty range-bound. So hopefully, the FOMC will give us something to work with and break out of this wedge one way or another to get us going. I would prefer a downside breakout. I still want to see the S&P below 2,500, you know, in the next 3, 4, 5 months, but we've got a lot of work to do. The sellers have a lot of work to do to try to drive that market lower. And although the highs are falling apart, and every time the buyers try to get the rally up, it completely fails, we're not seeing the sellers follow through either. And they haven't even been able to break down through these other levels of support. We have an unfilled gap back here. There's a lot of unfinished business, but they're just not able to get down there yet. So as it stands, got to treat it as a range, just like gold. You know, although it has a bigger potential move, right now, nobody's showing up to the party, so we got to treat it as a little bit of a range, wait for the FOMC to potentially break it out, and then we can start going from there. So at the moment, I do have a sell-side bias. I would prefer to sell above highs and try to push the market down, but, you know, right now, I think both sides would probably be okay, given that every end, up or down, tends to fail. Kind of stuck in the middle here. Over on the bonds have been rattling around a little bit, getting some decent bullish momentum to the upside here after trapping below this double bottom. They trapped below the double bottom and it snapped right back up again. Lots and lots of support coming in off of those lows. We have broken through resistance at 143.3, 125. That is gone. And I mean, arguably, even though this isn't really a solidified level of support, I would be very interested to see what happens if we can dip back down to where all of those buyers started slamming the market higher. That's at 142.25 to try to get that retest and potential support. Right now, it kind of looks like it was trying to get a flag, but it might have gone a little overexertive down here. If it does end up rallying up to the highs, anticipating a lot of selling, both buyers taking profit and new sellers trying to sell into the move with the disbelief that it's going to continue. But it might, you know, that is something to keep in mind. We do have a drastic overshoot below the lows of the channel. Right, there's the channel. We have smashed through the underside of that. And if it does end up breaking higher, we could see this overcorrect in an equidistant fashion, meaning that we have a breakdown of the wedge or breakdown of the channel low extreme was right there. And it broke down to roughly right around there. That's about the distance of the breakdown from peak to peak, which means that by the time we break out of the highs of the channel, we could be looking for a big rally up all the way up and towards, you know, 145, 146. It has a good shot at it. So right now, even though I do like the short, I don't believe a new high above 144, and I'll probably be looking to sell there. I would kind of prefer to see a, you know, a little bit more bullish emphasis. Snap up into that equidistant breakout to the upside, and then start rolling back over so we can find some better prices to sell into. Got a little overdone down here. I want to see it get overdone on the highs before we get too aggressive. Aside from that, though, nothing else to really add. Bonds are pretty straightforward there. Across the board, of course, looking at some of our favorites here, we do have in the stock market side of things. I've been watching ESPR today. Lots and lots of volatility on ESPR today. But the overall movement that we've got going on at the moment across the board on some of our favorites. Let me pop the daily chart out here. There we go. And scrunch everything inside of there. So looking at the daily, one of our favorites, again, Twitter is one that's been on the board for a while. We're finally getting some bullish rallying to the upside and getting that movement that we wanted to see. You know, we had that original area of support or resistance. They tried breaking out of the highs. That failed, looking for an equidistant breakdown. That has so far been holding really well, looking for a confirmation bounce, really, more than anything else. And we had a beautiful bull bar here, just like we had a beautiful bull bar here, but they're not following through. And we're seeing the exact same thing here on Twitter, where we have a beautiful bull bar, and then nothing happens, right? It hits the high and falls apart. It tries popping back up again, and it doesn't really do a whole lot. So, I mean, the buy candles are there, but we're just not getting the follow through on Twitter, and it needs a little bit more to keep this thing going before, you know, we start kind of losing hope, I guess. It's probably the best way to put it. It looks good. I want to see it stay above 30, and I'm looking for an upside objective back towards 35. But with all this lackluster continuation, it might just be another buy the dip if it does pull back. I just can't say that I'm too pumped about the way that Twitter is lining up here. MasterCard, however, MasterCard did finally pop, and we had a beauty of a pop. We were talking about the MasterCard daily holding this rising support coming up through here. They finally got a test. Oops. We got a test of rising support after that snap lower. Originally, it was a little bit steeper, coming down from these lows. Kind of grinding its way up. One way or another, though, we did have a beautiful bounce off of support. And we've been talking about buying MasterCard since back here. Actually back here, but never really triggered right. Finally got the trigger, pulled all the way back down. Couldn't stop out the buyers, popped back up again, pulled back, got another snap of support. Good bull bar, maybe trapping. Oh, we're finally breaking out. And then today, we gap all the way above our objectives. We were looking for 184, 185. We've put in a high of almost 188. So beautiful bounce on MasterCard. That's the kind of movement that we wanted to see. Obviously, earnings helped a little bit on that one. But either way, one way or another, don't really care why it did it. All I care about is that it did do it. And it hit the profit objectives to the upside for a lot of buyers on that gap to the upside. Beautiful, beautiful movement there. And again, you know, using the Visa market as a correlation, we already saw Visa was at new highs. MasterCard really wasn't following along. It finally did catch up and caught that pop to new tops. Beautiful movement there. Over on Facebook, Facebook is seeing a little bit of bullish momentum there along with Twitter. It seems like that sympathy movement and some of that, you know, Zuckerberg and court and all that other garbage is out of the way, or at least for the most part. Now we're starting to see the buyers return, and likely they bought on this dip down, assuming that price was cheap. Now again, when this was happening, we were talking about how I don't like trading this kind of stuff, not when fundamentals are going on, because what looks cheap now could be extraordinarily expensive in the future, and this was one of those risks that I was not comfortable with. And if you want a good example of that, ESPR is a great example of that. You know, this overall move, keep in mind, it doesn't look like it's that much, but ESPR closed yesterday just above or around $70. We're trading at 48 right now, okay? So that's a good example of what I mean. Sometimes, even though this is obviously driven on news and they had some really bad stuff going on, but this is a good example of what looks cheap, buying this dip down here, moving average support XYZ. If you're not playing it tight, you end up with something like this, and now all of a sudden that investment is down almost 50%. That's the kind of risk that you take when fundamentals are wreaking havoc a little bit here. So good example of it. ESPR was a beautiful scalp market today if you were able to jump in on some of the faster time frames. The 5-minute chart offered up several dollar moves just over and over and over and over and over again. Beautiful trading on ESPR. If you don't mind trading a slightly more expensive stock, $55, not everyone's cup of tea, but it's not too bad, and it offered up plenty of opportunity today. Some other ones here. What are some other ones that had some movement? We had MasterCard that already popped into the target. Twitter is looking okay. Needs a little more follow-through, preferably. Snapchat. Ooh, man, Snap. Oh, poor old Snap. Snapchat got just decimated in the overnight. They announced earnings, and it got Tyrannosaurus wrecked all the way down. We had that big gap to the upside, right? Beautiful gap to the upside. They tried getting it going, failed the highs. Dropped to the lows. Buyers are now starting to mitigate losses, exiting, and then this happens. Oh, whoa, whoa, whoa. You know, only maybe 2 months ago, we were twice the price. I mean, it was trading up at 21, a little over 21, and now, man, it just got absolutely hammered to the downside. So Snapchat, not doing so well in terms of the overall movement. Very, very bearish. But that said, you know, if we zoom out a little bit, And, you know, take a look at the bigger picture here. We are resting on major lows. And this major low area down at around 1125 or so will likely find a lot of sellers taking profit. Any short sellers that sold up here, anywhere inside of here, really, they're going to be looking to take profit at common areas. The first area that I would have been interested in was here, but it gapped over it. So, you know, there are probably some bouncing there in the pre-market. But after the market opens up, it opens up gap way down here. There's going to be a lot of profit taking and a lot of back and forth. This is where you start getting fear and everything setting in. Sellers are trying to get greedy and sell along with the move. Buyers are trying to buy out or get in, both as sellers taking profit and buyers coming in trying to pick up this low. And you end up with what we see right now, which is just a big doji. Not a whole lot of movement, a lot of back and forth. Beautiful intraday movement, but the daily's probably not going to look that great because of all of this back and forth. That's kind of what you end up with on days like this. Under Armour was another one. Under Armour had a beautiful rally that started the day off, and then it just completely gave everything up towards the end of the day. You know, the daily chart is looking really, really nice. They're trying to build in a little bit of a base of support. It's pretty obvious there's support here at around 14. And as soon as it tried tapping above these double top highs, it had a beautiful breakout move and then fell short of the highs and is now pulling back. That's not a good sign. Under Armour really needed to see a break above 1680s, really into 17s, to get some confirmation to the upside, get more buyers in this to try to catch the breakout move up. Right now we're not seeing that, and this miss on the highs could begin spelling a little bit of trouble, especially if they maintain this miss. They keep missing it. This could start pulling back pretty heavily, and then we're looking at challenging 1350s next. So a little bit of an issue there, maybe even a gap fill, actually, now that we look at it. A little bit of an issue with Under Armour. There definitely is, could use a little bit more, I think is the best way to put it. And I mean, they still have a little bit of time left. 5-minute chart doesn't look that great, but you never know. Looking for a rally to the upside. Maybe. It might get it. You never know. Doubtable, but it might get it. And that's really about it. So in terms of the markets that I was watching today, really the one that dominated my charts was ESPR. I was watching ESPR constantly today. That was my big one that we were watching today. Lots and lots of volatility, especially when you look at something like the 1-minute chart, especially. I mean, the 1-minute chart was just absolutely bonkers to the downside. Look at this thing, right? We closed yesterday up into the 70s. It opens gap down, not by much, but then it gets destroyed in the overnight session. Caught a big rally up early this morning. Once it started hitting into earlier levels of resistance, it started fading back off of that, and now we are back down towards the lows, almost breaking down to a new low of day below 45, well, into 44. Heck of a move today, and man alive, were the opportunities there. Even pre-market, there was a ton of opportunities for potential trades in there, but now, going into FOMC, it seems like everyone's kind of hitting the pause, putting on the brakes a little bit. We'll have to wait and see. But those are my kind of markets. I love those kind of markets, the ones that are really hauling around. You don't have to even trade that big of a size to really pull out some really nice wins. You know, even 100 shares, it's not really that much. You know, $4,000 or $5,000, and you're still able to rack away some really good moves when it's moving $5 in a shot, you know? So... really good market today, ESPR. We'll have to wait and see. Hopefully there's another one like that tomorrow. You know, I never like hearing bad news, but I mean, when it creates a trading environment like that, it's hard to be disappointed by it, you know? So feel free to type in any markets that you want me to take a look at for you. Otherwise, we'll wrap it up. It's a beautiful day outside. Might have to open the office up a little bit, get some fans going, go for a walk or something, head down to the beach. I don't know, but it's looking nice outside. Finally. Oh man, weather's been brutal here. Got about 35 minutes or so until we hit the FOMC news announcement. Be very careful going into the FOMC. It can really get nasty inside there. You do not want to get stuck on the wrong side of that one. All right. Well, I'm not seeing any other things coming in. So overall, I mean, a really good day of trading, plenty of opportunity today, and lots of good movement. You know, ahead of the FOMC, it seems like a lot of traders were getting some positions going, getting some things rocking and rolling, and well, it definitely offered up a nice morning this time around. It's a lot better than some of these other days. It's been just so slow, but one way or another, great movement. Hopefully you had a good trading day. As always, underneath the video here, click on the subscribe icon so you'll be notified every time we go live. We go live Monday through Thursday every week, and we go over our analysis. Also, click the little bell icon to the right of that. Right? I don't know, one of those directions. And you'll be able to click the little notification bell icon. You'll be notified every time we go live. So again, you don't miss it. But aside from that, you know, like we always say, it doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules. You'll be okay. Until next time, rest up, enjoy, and we will see you all tomorrow. Have a good one.